Thank you very much, Jane, and thanks to Yatsu as well. I'm going to invite everybody who's sitting by the central stage to come on, join us over here for this final panel in our Crypto Summit. We welcome you to join us very close to the stage. We're living through such a time of economic turbulence, to put it mildly. So I wonder where cryptocurrency fits in, and is it part of the problem, or is it part of the solution? Who should be writing the rules for this new world? We have a panel of experts here to help me answer that question. I'd love to introduce to you Ruanvati Suamankol. Welcome.
Thank you.
Secretary General, Thailand Securities and Exchange Commission. Also have Sam Latais. Welcome. How are you?
Excellent.
Good to have you. Co-founder and CEO of the MENA Catalysts. Also delighted to have Ola Dudan, co-founder and CEO of Bit Oasis, and Michelle Ritter. Welcome. Founder and CEO of Steel Perlot Investments. So I'm going to pose the first question to Ruanvati, Secretary General. Many policymakers don't really understand the technology yet that we're here to talk about. So I wonder how you think we can promote better dialogue between investors, developers, and public officials.
Thank you. First of all, I have to thanks for inviting me here. First of all, I think that it's new to everyone. It's a new evolution. Not only regulator need to keep updated on the development, but also everybody, including the investor. The question you asked how to promote, I think first you have to believe in collaboration that will work everything together. And secondly, you have to have open-minded. And third, I think that we encourage, as a regulator, encourage the discussion, the dialogue amongst the stakeholders in the market so that we welcome all the opinion, even though it's perhaps different one from the regulator. So that, if I may, for Thailand case, my colleague and I regularly have a discussion with the practitioner, investor. We hold the dialogue every 3 months. And secondly, when we want to issue the new regulation, the objective is to make sure this regulation is practical and workable. And we do a so-called hearing, public hearing. Thanks to the technology, AD, we use all kinds of social media to disseminate the draft regulation. Mm-hmm. Somehow we got opposition, we disagreements, and so forth. But at least things be heard. And I guess that what I heard from not only from the Thai market, but the other market as well, they need a clarity of regulation, so that if we, include them at the beginning, it would work, I'm sure.
Interesting.
I'm sure.
So, open dialogue and collaboration. Ola, tell us a little bit about how you see things, and then we'll come as well back this way.
First of all, I'm very happy to be in Riyadh and very happy to be speaking at FII. I do come quite often to Riyadh for work. We've got great partners that we've been working with over the last couple of months and years as well. So just a bit of a brief on Bit Oasis, and I'll come to your question. So Bit Oasis, we're the leading crypto asset platform serving MENA, TP, Middle East, North Africa, Turkey, and Pakistan. We're headquartered in the UAE in Dubai, and that's where we've got our approvals as well under the Virtual Asset Regulatory Authority. We've served hundreds of thousands of customers across the region. We're focused on the GCC and traded billions of dollars overall. For us, regulation is very important, and being regulatory compliant is actually one of the pillars that we focus on. I spend a lot of my time, obviously, working with different regulators across the region, some in the GCC, some outside in the GCC as well across North Africa. And definitely the thing that we encounter the first question is, understanding that technology more. And the questions that we get asked is, how do you actually conduct your business, right? From a risk mitigation standpoint, consumer protection, AML, KYC, and there's a whole kind of range of different risks, obviously, that regulators think about. My view, and definitely that's the thing that we focus on Bit Oasis, is that us, governments, regulators, so different stakeholders that essentially are supervising and regulating this industry, we're working towards the same thing, which is really consumer protection and ensuring that we're building sustainable businesses and ensuring that we are providing a safe environment and a safe ecosystem for retail clients, institutions, high net worth individuals, all those different segments that we're serving in a safe and regulated manner. Our view is that in the long term, if the customers and the incentives and also the protection of the customer is not taken care of, then you can't really build a sustainable business where you essentially serving your customers really well and your customers continue using your platform. So we really believe that at the end of the day, we're all working towards the same mission. Our mission at BitOasis is really providing safe and regulated accessibility to the crypto asset space, and hence regulation is really part and parcel of that.
Sam, what do you think?
First of all, I think in any elevated analysis, it's important to account for competing explanations. And I strongly agree with Ola's point about consumer protection, because it's critical that we think at scale 10 years into the future about the crypto economy of this region. How can we build up a whole ecology that can build a thriving digital economy here? And I think that virtual assets go to the beating heart of how we can diversify away from fiat and from a whole range of hydrocarbon related offline analog sectors. A major piece of the equation, I think, is thinking about the crypto economy almost the way a gardener would kind of look after his crops, like with planting seeds and curating carefully that evolution, but at the same time behave almost thinking as a hunter and gatherer that can protect this delicate garden from bad actors. So I think we have to move beyond the stereotypes or caricatures of the sector being either one, let's invest everything in crypto, or which very few people are advocating that we deal with. But on the other hand, it doesn't carry a lot of water, the notion of let's invest zero in crypto.
Yeah. Michelle, things are quite different in the States depending on which state you go in, right?
That's correct. Yeah, so touching on the US, actually, very quick background, as you did. Steel Perlow is an AI and analytics company of companies where we have trading funds alongside of it. Most of our startups right now are focused on the money space and global payment rails. We looked heavily at crypto. We do have some teams in crypto. But I'd say that the future of crypto, pointing to your question, 10 years from now, I'm probably the most bearish on compared to everyone here. And it largely has to do with regulatory buy-in. At least in the States, you can play a legal arbitrage game. So if you go to New York City or if you go to Florida, you have a much better chance of scaling than you would in other states. So ultimately, for crypto to be a long-term, I guess, alternative asset, regulatory buy-in would be necessary.
So let's tackle some of the other big questions out there. Cryptocurrency has become an established part of global markets, but where do we go from here? So one big change is underway. For the first 15 years of the crypto era, we had little to no inflation. That's gone now, right? We've got rampant inflation. So I wonder how that changes things. Ola, do you want to kick us off?
I'm going to actually build up on a point that you've mentioned and touching on the theme of hyperinflation and crypto, part of that narrative. Actually, a recent report from Chainalysis showing that the fastest growing economies in terms of crypto adoption are actually in the emerging markets. And the US is actually going down the ranks. So number one is actually Vietnam. And a lot of that is driven by play to earn and move to earn schemes. And then obviously you've got other countries as part of the top 10 list. I mean, the US I think is number 5. But you've got, obviously countries all the way from, Brazil, you've got Nigeria, you've got Turkey, of course, and I'll talk more about what's happening there. Pakistan is among the fastest growing economies as well. And you've got Saudi as well, which is actually the fastest growing market in terms of crypto adoption in the MENA region. So I think when you look at those top 10 countries and you're trying to figure out in this bear market as well, so I'm talking about data in the last 12 months, so this is not actually the peak in the bull market. We're still talking about a time where, in other markets, right, volumes are drying up. So when you look at those, forces, right, that are driving that adoption, inflation is one, and identifying income-generating opportunities is another. And then obviously you've got some speculative parts where people have extra or disposable income where they want to invest in other assets outside of the traditional stock market and all of that. So essentially when you look at those two main forces, which is inflation and income generating opportunities, I mean truly crypto is becoming a way for people to seek economic freedom and also financial or income generating opportunities. So take the example of Turkey where inflation is at an all-time high. It's the highest in the last 24 years. It's at 83%. The biggest token that's being adopted there, or people that are trading, is actually stable coins. It's access to tokenized dollar. And then obviously you've got BTC and you've got ETH and you've got all the rest. So essentially what crypto is becoming is an inflation hedge in those specific countries where the macroeconomic backdrop is obviously forcing people to do that. So I think this is very, very interesting. We see some examples of that obviously in the region as well, in Egypt and other markets. So we're definitely bullish on crypto and specifically the adoption of crypto in emerging markets, the Middle East being one, obviously Saudi being the biggest market. Saudi experienced 150% growth in adoption in the last 12 months. And it grown to $50 billion in terms of traded volume. So the opportunity is really huge, and that's why we're here as well.
But Runvani, you've also got a real-world example from Thailand about how much people are investing in crypto versus capital markets, right?
Yes, thank you. I have to say that this is a 24/7 days market. Unlike the traditional capital market that they open only Monday to Friday. So that for Thailand, I must say that we're quite lucky that we start very beginning 4 years ago with the law. And for the 4 years up till now, the numbers of participants, the investor, mostly retail, climb up from 100,000, if I'm not wrong, until now it's about 3 million.
Right.
I think that without the crypto winter, if there's no crypto winter, it may go to 4 to 5 million, who knows. But compared to the traditional stock exchange, it took them almost 40 years, to come up at about the same number of the investor. So that you can see that in Thailand, there is a massive crypto adoption. But when we mentioned about crypto, there are so many kinds. For the Thai SEC, we definitely to have facilitate innovation and also to protect investor at the appropriate level. I want to stress appropriate level. For us, we be clear that we promote the tokenization. But for the crypto which is no back asset or unbacked, this is very speculative. So that we keep telling the investor, mostly they are young generation. And for the behavior of young generation, I used to be young before, they said they can take care themselves for sure. Why you as a regulator need to say something, need to, we don't care for the young generation. But again, we keep telling them that as long as you can accept the risk, and your profile, the risk appetite, we don't mind. But one thing we have to make sure there may be some scam related to this or market manipulation.
Let's come back to that issue of bad actors, because Sam, I know you had something to add on this.
Well, a couple of points. First of all, we've seen often that when you have a hammer and the old adage about, well, then every problem looks like a nail, the missing piece of the equation we've seen is that, regulation may not always be the answer. A key part also, for instance, might be thinking about this as a public health issue, meaning, we have to inoculate the population, build up financial literacy skills, for folks to avoid falling into obvious or traps. And I think adopting more of a whole of community approach is a good hygiene and a longer term, more viable strategy than only thinking that the law itself is going to be able to solve this. The pain point we're going for. At the core of this, we've seen often that adding more regulation may not lead to the security or safety outcomes that we want.
Right.
If there's already 4 or 5 laws regulating a sector, then maybe adding another one is not going to deter that committed criminal from doing what they plan to achieve. Essentially, the impact is that the more muscular legislation we have sometimes it kind of expands incentives for folks to migrate to less regulated geographies, which is probably what some of the bad guys want anyway.
Let's ask another question to Michelle. You know, a large part of your business is building new companies. I know you said you're the most bearish, but where do you see the most money flowing, most investment flowing in what is quite a volatile market?
Yeah, so I'm going to answer that question and where I think it should be flowing.
Okay.
Where it is currently flowing is a lot into infrastructure. So what's most interesting is a lot of the work that Citadel is doing with Ken Griffin, kind of creating the infrastructure that would be necessary for institutional investors to actually get into crypto. Where I think the money should be flowing is into universities. So if you break crypto into the actual financial asset versus the technology itself, the technology is not scalable, it's not private, it's not decentralized, it's way too costly to actually scale long term. And I actually do believe that the universities can solve this problem. So that is a place where money should be flowing.
Where in universities? What would you like them to be doing?
Well, an easy example is this professor, Dan Benet at Stanford, who is working heavily on layer 1, scalability, and so on.
All right, good. So let's go back to this question around keeping the bad actors out. Because again, Runvadi, you've got an example of what happens if you don't.
Yes, of course. Basically, the role of regulator to ensure market transparency, to ensure the market confidence, and to ensure there's no impact on financial stability. So that for the bad actor, this is a basic or core function of regulator, that you have to enforce the law and penalize them, you know, because I mean, if one can do, they're gonna be like there are someone will follow, and at the expense of the investor, So that, as I said, we came to this market quite early, and we have a lesson learned. It's good, you know, for lesson learned, but we keep telling the history should not repeat itself.
Right.
We got a case 3 years ago that operator, licensed operator, I have to emphasize, license. Before we give the license, we do a fit and proper. At that time, we perhaps facilitate innovation, we do a light touch regulation. The operator, they took the private key overseas.
Took the private key overseas.
And then even though we bring all the enforcement officer went to their operation, only server, only computer, but the coin up there in the cloud when we didn't have the password.
Yeah.
So that we had the interest of 250,000 investors at that time, you know, quite a big figure. Numbers, you know.
Yeah.
So that my colleague and I need to do everything under the law, give our power, so that we brought the coin back 98%.
Right.
You know.
Learned the lesson.
Yes. And right after that, we raised the bar. Definitely, we raised the bar. We cannot stand still, you know, because at the expense, as I said, of the investor. So that we raise the bar, but again, I have to tell you that whatever we do, raising the bar of the regulation is up to international standard. Eddie.
Yeah.
Right now, luckily that we have a so-called IOSCO, International Obscurity Organization. You know, we work together on this rule setting or standard setting to make sure innovations we promote, and also the other side of the coin, we also protect investor at asset appropriate level. You know, this is a good collaboration that we work together because crypto is borderless, it's a cross-border, so that we need to talk to everyone, you know.
So bad actors, we're going to keep them out. But Sam, briefly, give us some of the opportunities here, because you're a specialist on the relations between crypto and government.
Short answer, if you look at the geometry of growing cryptocurrency demand and the bulging youth demographic in this region, one could argue that the market fundamentals are almost too hard to screw up. Imagine 20 years into the future. Right now you have the rise of Generation Y leaders increasingly running key markets in this region. And it, in certain ways, I think is really wise how some governments in the region are adopting kind of a Hippocratic oath approach of first, do no harm. Let's figure out what this is, what it is, to understand what we're regulating, and not falling into the trap of kind of heavy regulation versus light regulation, because we want to make sure that we're measuring the right things first. And so that's pretty neat, seeing how governments are adopting a strategy of almost resembling like building a house, meaning before building the third floor, let's build the ground floor.
Go ahead, Ola.
Yeah, I actually fully agree with what Sam mentioned, and also the example of fending off, bad actors or all of that. So as an operator in the space, obviously, we deal with regulators continuously. And it's a tricky one. I do think regulators probably have the toughest job, trying to figure out how to open up, supervise, and at the same time enable, the right platforms and the ones that are fit and proper to really grow and, serve the market. So the space has huge opportunity, right? So as I speak, it was $2 trillion. Much of that was still speculative activities, but crypto is not just a speculative asset. There's all this potential, obviously, cross-border payments, remittances, NFTs, also fractionalizing real estate and tokenized securities. So essentially, it's a technology that is going to innovate and disrupt multiple verticals horizontally. So you're really talking about tens to hundreds of trillions of dollars over the next, 5 to 10 years in terms of how big that space would be. And it's very, very tough to kind of figure out, okay, so how do we start, regulating this? We see different regulators obviously going from a ban to a wait and see, all the way to like proper frameworks, heavy regulation. The tricky part with those two ends of the spectrum is that you're not enabling the platforms domestically and locally in terms of an entrepreneurship ecosystem to gradually grow to serve that domestic market or local market. So agree with what Sam mentioned, is like, you want to start kind of like with the pillars, with the skeleton, ground floor, first floor, and then build up and ramp up as those players grow. So it's kind of like more of a risk-adjusted type of approach, and then build with those companies as they build as well. And we see different examples where that's being done in the region, internationally as well. So that gradual approach, I think, is a really smart approach for regulation.
So running out of time, but I want to cast into the future. And Michelle, if we see investment flowing into the right places, where do you think we're going to be in another 15 years?
So I think that you touched on a very important point, which is that crypto is kind of used as this bucket definition for so many different things. So we have to be very precise with what we're talking about. Is it a financial instrument? Are we tokenizing a real asset like real estate? Where are we getting? If I throw it out, best case scenario is we've solved some of the scalability and privacy problems technically. We have regulatory buy-in. I do think that you will need US or really developed economies to actually buy in so that you have depth even in emerging markets. And ultimately, I think it can scale. So I would be bearish today on some of crypto, but very bullish on ambitious people who want to change the world.
Runvati, give us a cast into the future. 15 years in Thailand.
I think it's hard to predict though, but one thing that is fact of life, you keep learning the new things every day, you know. And for the regulator, I think its basic principle is same risk, same rule, same activity. No matter what gonna be no innovation is, you know, but as long as if it is security, we treat it as a security regulation, so on and so forth like that. But what we keep telling the public is do not do so-called FOMO, fear of missing out.
Right.
So that many train for you to catch along
Yeah.
the way, you know. And last thing is we emphasize on the what you call education. We produce our own program, so-called Crypto 101, so that digital literacy, financial literacy is fundamental no matter what. Thank you.
Interesting. That wraps our Crypto Summit. Thank you very much to my fantastic panel. Ladies and gentlemen, let's give them a huge round of applause.